Stellantis has just flipped the script on the entire U.S. auto industry, and no one saw it coming. In a move that's sending shockwaves across dealerships and boardrooms alike, the global auto giant has slashed prices on some of its most popular models. And we're not talking about minor markdowns here. We're talking thousands off sticker prices across brands like Jeep, Dodge, Ram, and Chrysler. Consumers are flooding dealerships, competitors are panicking, and Wall Street is watching with wide eyes. Something big is happening, and this might just be the beginning of a full-blown price war in the American car market. So, what triggered this aggressive move? The answer lies in a perfect storm of unsold inventory, rising interest rates, consumer pushback, and a shift in buyer priorities. Stellantis found itself sitting on a mountain of unsold trucks and SUVs. Vehicles that once flew off the lots are now collecting dust under the summer sun. As affordability hit rock bottom for the average buyer, Stellantis had two options: slow production or spark demand. And they chose the latter with fire. Massive rebates, unheard-of financing options, and deep discounts have hit the market like a freight train. We're talking Ram 1500s going for under $40,000 again. Jeep Grand Cherokees seeing cuts of $6,000 or more. Even the Dodge Durango and Charger are suddenly looking like budget buys. And the discounts aren't just regional, they're rolling out nationwide. For families, tradesmen, and small businesses, this isn't just a sale. It's a once-in-a-decade opportunity. And the timing couldn't be more calculated. Just as Ford, GM, and Toyota were tightening up pricing strategies and focusing on EV margins, Stellantis decided to go all in on traditional value. While the other giants are cautiously dancing around rising costs, Stellantis has stormed the floor and dropped the sledgehammer. The message is clear. They want volume, they want market share, and they're willing to blow up the pricing structure to get it. Behind closed doors, analysts say Stellantis is playing the long game. By undercutting its rivals in the short term, it's aiming to dominate market segments that have been slipping away, especially in trucks and SUVs, where loyalty matters and perception of value can sway millions of dollars in monthly sales. This isn't just a pricing tactic, it's a strategic realignment, one designed to shift the power dynamics of the American auto market. And the effects are already starting to show. Dealers who were quiet a month ago are now moving vehicles by the dozens. Inventory that had been sitting for 120-plus days is now disappearing in less than a week. Social media is buzzing with stories of customers walking in for a test drive and walking out with a deal they didn't think possible. Car review channels and auto forums are lit up with comparisons, debates, and disbelief. Some buyers are canceling pre-orders from other brands just to take advantage of Stellantis' aggressive pricing. But not everyone is cheering. Ford and GM dealers are beginning to feel the heat. They're being forced to answer uncomfortable questions about why their prices haven't dropped. Some are quietly lobbying their manufacturers for incentives to match Stellantis. Others are slashing used car prices just to stay competitive. And investors are watching all of this with a mix of fascination and fear. Because if this pricing war escalates, profits will shrink and production lines will shift. Meanwhile, industry insiders are warning that this could be the opening salvo of a broader collapse in new car pricing. We may be watching the beginning of a reset, one where inflated sticker prices from the past 3 years are no longer sustainable. Stellantis, with its deep international roots and cost-efficient platforms, might be uniquely positioned to weather the storm. But others? Not so much. And let's not forget the electric vehicle angle. While competitors are pushing pricey EVs into a market not quite ready to commit, Stellantis is leaning into what still sells: gas-powered trucks, performance cars, and off-roaders. Their decision to delay EV rollouts in favor of profitability and volume could now look like genius. Consumers are signaling that affordability matters more than novelty, and Stellantis is responding in real time. But what's the next move? Will this discount blitz become permanent, or is it just a short-term shakeup? Will Ford or GM be forced to counterattack with price cuts of their own? Are we entering a new phase of consumer power in the auto space? One where loyalty is bought with value, not branding? Or is this just the calm before a bigger storm, as manufacturers brace for a demand cliff and economic headwinds? Because here's the thing, this isn't just a business strategy, it's a survival tactic. Stellantis knows that the average American buyer is hurting. Inflation, higher monthly payments, sky-high insurance premiums. It's all squeezing consumers like never before. And instead of pretending that pricing pressure doesn't exist, Stellantis is flipping the board and saying, "We hear you." That message is resonating. It's not just about selling cars anymore. It's about rebuilding trust, loyalty, and relevance in a market that's been drifting further out of reach for the average working family. And don't overlook what this means for used cars. As new vehicle prices drop, used car values are coming under immediate pressure. Trade-in values are already adjusting, and buyers who paid a premium in the last 2 years are starting to see depreciation hit harder than expected. This ripple effect could trigger a broader reset in both new and pre-owned markets, especially for high-mileage trucks and SUVs that once commanded premium resale values. Dealerships are being forced to reevaluate their inventory strategies. Auction lots are starting to see more volume, and finance companies are beginning to reassess risk models. Meanwhile, rental car companies, some of the biggest fleet buyers in the country, are eyeing this Stellantis fire sale as a chance to refresh aging fleets on the cheap. That, in turn, puts even more downward pressure on wholesale prices. The entire pricing ecosystem is now being rebalanced, and it all started with one bold decision from Stellantis to drop the hammer. Let's also talk production. If these discounts prove successful, and so far, early signs suggest they will, Stellantis may actually ramp up certain model lines to meet demand. That's a wild twist from just a few months ago when automakers were discussing output reductions due to softening sales. If Stellantis shifts into high gear and pushes more units into the pipeline while competitors continue holding back, it could dramatically change dealership dynamics nationwide. We're also seeing Stellantis lean hard into dealer support. They're offering back-end incentives, bonus cash programs, and co-op advertising deals to help move metal faster than ever. Salespeople who are struggling to hit monthly quotas are now blowing past targets. Showroom traffic is spiking, and in many cases, customers are coming in with pre-approvals already in hand, ready to buy the moment they spot a deal. This kind of aggressive, full-spectrum approach to sales is something we haven't seen since the pre-pandemic days, and it's a powerful signal that Stellantis is on the offensive. And here's where things start to get even more strategic. The company isn't just cutting prices blindly. It's targeting key battleground segments, half-ton pickups, mid-size SUVs, entry-level family crossovers. These are the bread-and-butter vehicles that Americans rely on, and Stellantis is planting flags in all of them. If they can dominate even 2 or 3 of those categories through aggressive pricing and volume play, it could put intense pressure on rivals to either match the discounts or risk losing ground entirely. We're even hearing whispers that this move may be a precursor to a larger market disruption, something that involves Stellantis reimagining its entire U.S. sales model. Some insiders believe this could be the first step toward more direct-to-consumer strategies, cutting out middlemen in specific states, or even bundling vehicle ownership with subscription-based maintenance packages to lock in long-term brand loyalty. None of that's confirmed yet, but the mere fact that it's being discussed shows just how seismic this pricing bombshell really is. And then there's the political angle. Stellantis has been under pressure, like other automakers, to navigate shifting regulations, emissions targets, and international tariffs. By pushing aggressive pricing now, they may be hedging against future policy changes that could tighten margins or restrict flexibility. In a volatile global trade environment, this kind of forward-facing move may offer them leverage when negotiating at the federal level or even with labor unions. The labor piece is important too. With the United Auto Workers still ramping up pressure for better contracts, Stellantis may be playing a psychological game here, demonstrating that it can move huge volumes and keep plants busy if the right pricing strategy is in place. That's a powerful bargaining chip when the next round of talks begins. High sales equal leverage, and Stellantis is stacking the deck before anyone else even shows their hand. And let's not forget the global angle. Stellantis isn't just competing in the US. It's a multinational heavyweight with deep roots across Europe, Latin America, and Asia. What learns from this aggressive American pricing model could ripple outward. If it proves successful here, expect similar discount strategies to be tested in other markets where affordability is under pressure. This could lead to a global transformation in how Stellantis prices, packages, and positions its vehicles, especially in countries where economic uncertainty has kept car buyers on the sidelines. But while Stellantis is pushing full throttle, there's another layer to this story: technology. Many of the vehicles seeing the steepest discounts are still packed with features: touchscreen infotainment, driver assist systems, off-road packages, and tech-heavy interiors that would have cost a premium just a few years ago. Stellantis isn't slashing prices on base models alone. They're offering serious value on well-equipped trims. That's making competitors sweat, especially those trying to convince buyers to pay more for stripped-down electric options or bare-bones lease specials. Speaking of electric vehicles, Stellantis' EV rollout in the US has been relatively slow compared to rivals like Ford and GM, but that may now work in their favor. While other automakers are facing rising EV production costs and sluggish consumer demand, Stellantis is sidestepping that immediate pressure and leaning into what still sells: rugged, proven, gas-powered vehicles. Their strategy appears to be dominate the combustion engine space now, clean up the market share others are losing, and then roll out EVs when the timing and pricing makes more sense. And that long-term EV play is already taking shape behind the scenes. Stellantis has been quietly investing billions into battery technology, joint ventures with battery suppliers, and new modular EV platforms. But unlike others, they're not rushing half-baked EVs to market. They're letting the dust settle, letting competitors exhaust themselves, and watching carefully. Once the cost curve drops and consumer confidence in EV infrastructure rises, Stellantis could enter with full force, and by then, they may already own the combustion segment. Another huge factor to consider: financing. Stellantis is partnering with its financial arms to offer highly competitive rates, extended terms, and even deferred payment plans. For many buyers, this could be the difference between dreaming and driving. With interest rates stubbornly high, this kind of flexibility is more than attractive. It's essential. Combine that with low sticker prices, and suddenly Stellantis has created the kind of affordability formula the industry hasn't seen in years. But what's fascinating is the psychology behind all of this. Consumers who felt priced out of the market are now seeing hope. They're re-engaging. They're talking to dealers again. They're browsing listings and running payment calculators. The buzz is real, and Stellantis has tapped into a powerful emotional current. The feeling that maybe, just maybe, the average buyer isn't being forgotten. This could have profound effects on brand loyalty. Shoppers who were loyal to Ford or GM for decades are now giving Stellantis brands a second look. And if they walk away with a great deal and a positive ownership experience, that loyalty could shift permanently. That's something competitors can't afford to ignore, because once a customer switches brands, they often don't come back. And the aftermarket is responding too. With more Stellantis vehicles hitting the road, parts suppliers, custom shops, and service centers are shifting their attention. There's renewed interest in Ram upgrades, Jeep accessories, and Dodge performance mods. It's an entire ecosystem that's being reignited, all sparked by a bold pricing move at the manufacturer level. Now, all eyes are on the next sales report. If July and August numbers show a surge in Stellantis deliveries, that will send an unmistakable message to the rest of the industry. Value is back, and the game has changed. The question is, how fast will rivals react? Because the longer they wait, the more customers Stellantis is going to scoop up, and once that momentum builds, it's incredibly hard to stop. And that momentum is already accelerating. Some dealers are reporting double or even triple their usual traffic, especially in suburban and rural markets where affordability matters most. Trucks are moving fast, SUVs are clearing out, and even less popular models, like the Chrysler 300 or Jeep Compass, are seeing unexpected demand spikes. This isn't just a temporary bump. It started to look like a full-scale consumer shift. Fleet buyers are also stepping back into the ring. Small construction companies, delivery services, landscaping businesses, they've all been delaying purchases due to inflated prices. But now, with Stellantis making commercial-grade Rams and ProMasters more accessible, those buyers are pulling the trigger. Some dealers are even creating bulk purchase packages just to keep up. And that spells trouble for rivals who've priced their work trucks out of reach or focused too heavily on electric-only fleet solutions. What makes Stellantis' move even more potent is that they've done it without sacrificing design or identity. The aggressive pricing hasn't watered down the appeal of the vehicles. A Dodge Charger still looks mean. A Ram 1500 still feels like a premium truck. A Jeep Wrangler still screams adventure. Stellantis has kept the muscle, the attitude, and the boldness, but now it's offering all of that at a price people can actually afford. That's a winning combination. Meanwhile, social media has turned into a free marketing engine. TikTok videos of buyers bragging about deals, YouTube channels reviewing markdown vehicles, Facebook Marketplace lighting up with brand new, just bought posts. It's spreading like wildfire. Stellantis is getting millions in free exposure just from the buzz alone. They didn't have to pour hundreds of millions into a Super Bowl ad. They just dropped the prices and let the market do the talking. On the manufacturing side, Stellantis is reportedly making rapid shifts in production scheduling. Plants in Michigan, Ohio, and Mexico are seeing revised forecasts and staffing adjustments as certain models suddenly become hot again. Supplier orders are ramping up. The parts chain, once slow and cautious, is now being asked to accelerate. It's a domino effect, and if Stellantis can manage this surge without bottlenecks, it could become the case study for post-pandemic auto recovery strategy. But this pricing strategy isn't just a clever marketing trick. It's also a powerful counterpunch to one of the industry's biggest problems, consumer distrust. Over the past few years, buyers have grown cynical, frustrated by inflated MSRP, bait-and-switch dealership games, and overpriced options. Stellantis is flipping that narrative by making it simple again. What you see is what you get. No crazy markups, no tricks, just a clear, aggressive price that says, "We want your business." That transparency is winning people over in ways slick ads never could. Even competitors' loyalists are admitting it. Stellantis is delivering real value at a time when most automakers seem out of touch. Some GM and Ford fans are posting side-by-side comparisons and realizing just how wide the pricing gap has gotten. It's no longer just a question of brand preference. It's becoming a matter of common sense. When you can get more features, more performance, and more utility for thousands less, the emotional connection to a badge starts to fade. But what happens next will determine whether this move is a temporary disruption or a permanent transformation. If Ford and GM hold firm on pricing, Stellantis could run away with an entire quarter's worth of market share. If they respond with their own discounts, it could trigger a full-scale pricing war the likes of which the industry hasn't seen since the Great Recession. Either way, the consumer wins, but for the automakers, it's going to be a fight for survival. And that fight is already heating up. Whispers out of Detroit suggest that Ford is quietly working on its own incentive packages, while GM is reevaluating its summer sales strategy in key battleground states like Texas, Florida, and California. No one wants to be caught flat-footed, but the truth is Stellantis forced their hand and did it without hesitation. They've redefined the rules of the game, and now the competition is playing catch-up. Behind closed doors, this aggressive move is causing intense friction in boardrooms. Executives are torn. Do they protect profit margins or go on offense to regain market share? Do they double down on EV investments or pivot back to what sells today? And perhaps the most pressing question of all, how long can they afford to wait while Stellantis gobbles up customers left and right? As for the American consumer, this could be the break they've been waiting for. After years of rising prices, limited options, and shrinking affordability, Stellantis just cracked open the floodgates. Buyers who thought they'd have to settle for used, delay a purchase, or walk away from a new vehicle altogether are suddenly finding themselves back in the game, with real negotiating power and real choices. This isn't just a discount event, it's a statement. Stellantis is telling the world, we're here to win, and we're not waiting for anyone's permission. And in doing so, they may have just triggered the most aggressive, high-stakes price war the U.S. auto industry has seen in over a decade. So buckle up, because what happens next could reshape the future of car buying in America, from the showroom floor to the factory line. One thing is clear, Stellantis didn't just drop a bomb on the auto industry. They detonated a movement. And now, the entire market is scrambling to respond. Thanks for watching. Don't forget to like, share, and subscribe for more breaking updates on the biggest moves in the auto industry, because we're just getting started.